Very good morning, traders. It's Stu Naupan here, founder of Master Markets, Elite Trades Conference, and the Traders Open Day. So today we are on cable on our Morning Glory Strategy 4.0. So over here, as you can see, today was again a mismatch trade. A mismatch trade. So we don't have any positions today on this particular trade. So now let me go through on days when you have a mismatch. What should you be doing? First point, you should always start off with, if you're intraday trading, always start off with your higher time frame bias. Okay, your higher time frame bias. Okay, that's what you should always be starting off with. Now, how do you formulate the higher time frame bias? You have to look at the bars. You have to look by price analysis of the bars, bar by bar price analysis. Now, most people would not know how to do that. Let me give you a few clues of what you should be looking at. Now, before you formulate bias for today, what you should be looking at is yesterday's bar. So previous day's bar to start with. Now look on how the price has done. For a start, you can see if it has been a buyer day. I mean, just one hint I can give you, right? So if you see if it has closed above the open, the next thing then you need to look at is basically the range of the bar and see where the close has happened in relation to the range of the bar as well. So the first point what you can look at is see if it's close above open, and the second point is basically whether where it has closed in relation to its range. Okay, where the close is in relation to the range of the bar. The more higher it is to the high, near it is to the high, it is more of a higher strong day. If more nearer it is to the low, then it's a more bigger bearish day. Okay, so if you have a bar like that, okay, to the low, then it's a bearish day. Probably bias is down for the next day. And the second one, if you have something like that close above the open, very near to the high, then the bias is more to the upside for the next day. I'm just giving you simple biases for you to consider and research into. Okay, you must research because here at Master the Markets, our whole systems are all backed up by solid years and years of research by an elite team of traders. Okay, so they're very strong with a strong edge, and that is why when you hang around the professionals, you get a shortcut towards where you want to get to. Right, now let's take a look at this once again. So where was I? So I was first talking about mismatch trades, and the first thing that you need to do is form a higher time frame bias. Okay, higher time frame bias. As of yesterday, the bias was down. The bias was down. Now, very quickly, I'll tell you. In terms of that, this was an outsider bar. This was an outsider bar, and in our statistical analysis, according to the close in relation to its range, there was an 80% chance that it would take a low of that outsider bar, right, before or rather than taking out the high. Okay, so 80% chance of it taking out the low. So therefore, when I got such a strong probability towards the low side, I'll only be looking to take short. All right, so that was a bias from yesterday. These are all similar things that we look at in our live trading room that we do every evening as well. That's for end of day trading systems. This is an intraday elite trading strategy. All right, now, so that's the first thing over here that we're looking at. So basically the higher time frame bias, and you saw that the higher time frame bias was on the downside. Second thing we look at is lower time frame. Now, we look for the lower time frame to match up with the higher time frame bias. But today, on our price map, which I've talked numerously and extensively in my previous videos, you can see that according to this price map, which is just only based on price alone, no other derivative of price, no other indicators which are based on price and sub based on price. This is raw price alone. So it's very, very fast traders, very, very fast signals for you, because as you all know, the common cliche statement, price is king. Right. Now, so based on all of that, the price map, which is just based on price alone, we have to see whether the lower time frame, according to that price map that you have drawn or you've come up with, or based on the price map that we have here, which has been researched very thoroughly, you can see that if the lower time frame runs and overrides certain levels on the price map and the bias is now to the upside, then we have what we call a mismatch. Okay, we call a mismatch. Now, first rule of thumb, as much as possible, always look to take the bias in terms of the higher time frame. Okay, now unless the lower time frame shows a bias that totally overrides the higher time frame bias, then you can step aside, or if you're experienced enough, you can take it to the bias of the lower time frame. Now, what do I mean? What case scenarios can the lower time frame totally override the higher time frame? Two scenarios I'll give you. One, when it overrides a certain range point. I've talked about 1 ATR10. If the 1 ATR10 is about 70-80 pips, and if you measure from the low of the intraday range to the high right now, if it has already crossed that range, let's say 70 pips right now is 77, then you do not take it at all, because on this intraday, it would be really good if you base your intraday strategy on a range basis, okay, because it's a very strong concept. It will sustain through time. All right, so if it has crossed through that range on the lower time frame, then it will override your higher time frame bias. Don't take it at all. Step aside. All right, that's the first thing. Range. So you must do your range based studies. Okay, that's what we do. Of course, you want to shortcut that. I mean, you hang around the professionals like us. Next thing, time. You need to do your time based studies as well. By what time does it need to take out the range? What time does it need to fill the range? By what time does it need to take out the previous day's high? What time does it need to take out the previous day's low? All those time-based studies you need to do as well. And if the lower time frame overrides that time-based studies and stats that you have, then again, you will not take the trade according to the bias of the higher time frame. Okay, so these are the things you need to consider. The final thing what I would mention to you in a mismatch, what you need to consider is, if let's say higher time frame is down like today, bias is down, and the lower time frame bias is up, and if you do want to take a short position, right, a short position on it in line with the higher time frame, and let's say those range-based studies you've done, time-based studies are done, are not invalidated, and you can still take a short in line with the higher time frame, but lower time frame is still showing a short bias but not totally violated yet, then what you can then do, the third thing only you can consider is your power rewards. Because the last thing you want to do when you get a signal over here and your profit is just only like 20 pips away but stop is like 50 pips away, you don't want to take that, because the last thing you want to rule out is the large losses. Okay, we don't want to take big losses, traders. We don't take big losses. And another thing that you can't, very tough to override is the price route probability, which I've talked in the previous videos. If you haven't heard it, or if you don't know anything about it, I would highly recommend you to go and look at the previous videos I've done on price route probability. And if you want to access all these videos, it's totally for free on our YouTube channel, Master the Markets. Right, so just to recap, to sum up this video, so the first thing you need to do is basically look at your higher time frame bias. Okay, higher time frame bias. So that's the thing, higher time frame bias was on the downside. Second thing, look at the lower time frame, whether it correlates or not. That's what I said for today, was on the up, so it was a mismatch. And the third thing, if you still do get and consider to take a trade still on the downside, then you have to look at your power rewards before you get a signal. Or if you're a bit more professional, you want to take it now from the lower time frame up, then you still have to consider your power rewards. I got neither of this today, so that's why I did not take the trade. Okay, always remember, traders, do not look to jump into a trade, because remember, there will always be another day. There will always be another trade opportunity. Some trade opportunities are so clear or so obvious for you to make money, and just make money from them in the beginning. Okay, and some trades will be a bit more unclear and not really of the highest probability. On those kind of trades, just stay away, right? So I guess that's pretty much that from me on this. To go and digest this information, go and do also your research and homework. And of course, if you have any other questions at all, always interact with us on Facebook. Ask your questions, post it over there, or email us as well. We are more than ready to help sincere, dedicated, committed traders who want to get there no matter what it takes, and has got a true passion for trading and making money work for them. Till the next time, traders, stay disciplined, follow your trading plan, and keep trading like a master.